Welcome to Dr. Fred Markets. This is not financial advice. Most people will never understand how crypto, AI, and global finance are reshaping the world. The rules are changing, and the ones who adapt early come out ahead. You're here. You're paying attention. That already makes a difference. Let's go.
Star Wars just exposed the only safe bet in space. Disney prints $12 million on a Thursday night for The Mandalorian and Grogu. That's fake space. Meanwhile, real rockets are finally starting to look like a business, and you're still watching like it's a sci-fi trailer instead of a balance sheet. Signal 1. Rocket Lab pops over 8% today, while the rest of big tech sulks. Stock up, Nvidia down, Google down, S&P just gently green. Money quietly rotates from AI story to who actually launches hardware into orbit without exploding every other Tuesday. Starship Flight 12, version 3, lining up its second launch attempt. If it works, every rocket multiple gets repriced. Signal 2. SpaceX now launches more mass to orbit than every country on Earth combined. That's not marketing copy, that's raw tonnage. And they're doing it with a system designed to be fully reusable. Translation: one side of the launch market runs like Costco, the rest runs like a boutique grocery, charging $12 for asparagus. Signal 3. Starlink is already throwing off real cash, not user growth, fairy dust. Actual revenue, reportedly tens of billions on the horizon, off the same hardware stack that powers Starship. That's the part every retail investor ignores. The rocket is not the product. The rocket is the distribution network for whatever business you bolt on top of orbit. Here's the cliffhanger. The only pure-play public rocket stock is being priced like a toy, while a private company you can't buy today is quietly building the toll road for the entire space economy. Now, the connection. Today's headlines look unrelated. Iran tensions in the Strait of Hormuz, Ebola risk in DR Congo, Google flailing around with AI glasses, Mandalorian crushing box office. 4 different channels, one story. Everybody wants safer, more controllable, more digital infrastructure. And that lives in orbit. Strait of Hormuz risk goes up, shipping routes get fragile. Insurance spikes. Governments and corporations lean harder on satellites for routing, surveillance, logistics, and eventually bypassing choke points altogether with more resilient supply chain mapping. That needs launches, not lightsabers. Ebola risk goes very high in DR Congo. That's not just a health story. Epidemiology is now a data problem, tracking outbreaks, mapping movement, coordinating response. Again, satellites, remote sensing, bandwidth. Rockets are the shovel sellers in a world that suddenly cares a lot more about who moves information, not just oil. Google's AI glasses almost there? Translation: the edge device dream still needs brutal compute and real-time global connectivity. Wi-Fi dies. Cell towers have borders, satellites do not. SpaceX already proved this with Starlink. Every future headset, drone swarm, telemedicine device, and battlefield AI wants fat, low-latency pipes. Where do you think those pipes run? Through the sky. And then Mandalorian and Grogu drops $12 million in one evening.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
That's the part nobody says out loud. Your brain still values fake space more than real space. Studios squeeze billions from CGI nebulae, while the companies quietly owning orbital real estate trade like speculative garbage. Here's your one new fact for today. The rocket business only makes sense when you stop thinking planes and start thinking ports. SpaceX and Rocket Lab are not airlines. They are building Rotterdam and Singapore in orbit. Once the ports exist and runs get cheap and frequent, every new space business, communications, climate monitoring, defense, gaming, whatever, must pay rent to whoever owns those ports. Mechanism is simple. Step 1. Reusable rockets drive launch cost per kilogram down and launch cadence up. Step 2. Cheap, frequent launches enable dense satellite constellations and in-orbit infrastructure. Step 3. Whoever controls those constellations controls recurring revenue streams that have nothing to do with the megapixel count of your phone. That's why Rocket Lab jumps while Google sulks. One is fighting margin wars in ad land and guessing about glasses. The other is quietly trying to build the Costco version of space logistics. So what does this mean for you? First, stop treating space stocks like meme tickets. They are early-stage infrastructure plays. High risk, yes, but structurally nothing like your favorite story stock that sells vibes. Second, learn the one metric that matters: cost per kilogram to orbit for each player, and trajectory of that cost over time. If that number doesn't fall and launch cadence doesn't rise, it's not a port, it's a fireworks company. Third, action step. If you want exposure without betting the farm on one name, build a tiny orbital bucket in your portfolio. That can be a sliver in public launch players like Rocket Lab, plus any diversified ETF with real satellite and data center and space exposure, plus keeping a running dossier on private names like SpaceX for the day they finally list or hit secondary markets you can access. You are not investing in rockets. You are renting future toll booths on global data, defense, logistics, and entertainment infrastructure that never touches a border. Ignore the cosplay, follow the ports. This is not financial advice, but here's the truth. Today, the only people taking space seriously are defense ministries and a handful of funds. Retail still thinks Star Wars weekend. You now know better. 3-point summary. 1. Real money in space comes from owning launch ports, not cinematic space fantasies. 2. Falling cost per kilogram and rising launch cadence are the only numbers that matter. 3. Build a tiny, deliberate orbital bucket instead of YOLOing story stocks or waiting for Disney to beam you a pension. If this taught you one real thing, subscribe. Tomorrow, we dissect the next blind spot they're feeding you as entertainment. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.